All right, we are recording. So good morning. Thank you all.
Good morning.
Logging in this morning for Coffee with Sarina. It's been so fun. I love doing this on Fridays because then I know the weekend's coming up. And I'm so excited because today I'm talking to my friend Dan Glicksman and Jim Bishop from Allstate Insurance. And Dan definitely knows how to keep it interesting, that's for sure. If you've ever read any of his blog posts, they're definitely entertaining. And a quick real estate update. Our inventory has been pretty low here since June. It's actually right now, active listings are down 20%. It had gotten to the point where it was about 55%. So definitely improving there. Sales for April were down 30%, but that's understandable because we're on day 60 of the quarantine right now. In Arizona, the quarantine is actually being lifted as of today. So it'll be pretty interesting to see what happens. It looks like there's going to be some pent up demand of people that have been waiting to buy or sell. We don't have the tourists here that we typically do have, but we'll just have to see what happens because it has real estate's been considered an essential business. So we have been, people are buying and selling as necessary. I feel like it's just less competition. So instead of having 10 multiple offers, you may only have 1 or 2 now. So for the buyers that are out there, it's definitely a little bit easier to find something. So let's get started. If there's any questions, you can feel free to put it in the chat. You can take yourself off mute. You can send me a text message, whatever you want to do. But I want to introduce Dan and Jim. Jim is on his phone, I believe, right?
Yes, ma'am.
Yeah. So my first question, and this is, from personal experience, my teenager is getting his permit soon. And I have heard stories about how much it costs to put your teenager on your insurance. So out in Arizona, at 15 and a half, they get their permit. And then at 16, they can drive. So at what point do I need to make sure that we're covered with insurance and my teenage driver?
Well, Jim, I'll start and then I'll let you continue this one if you want. But well, first you just want to warn your neighbors. That's the first step, right? Just let them know. Okay, so it's good knowing that Ryan's got his permit. The second thing is you don't need, so permitted driver, you don't need to add them to your policy yet, not until they're licensed. So don't let them go get their license. No, I'm just kidding on that as well. But it changes the day they get their license. Jim, you want to jump in on that?
Yeah, right. Yeah, it just once they become licensed, and it could be particular to Allstate that if they're on their permit, they don't have to be on a policy. There are some other insurance companies that you might have to list them on the policy. So you just want to check with your particular insurance company to make sure that if they need to be listed, that you have them listed. But with Allstate, you don't have to actually put them on your policy. You're going to be looking at anywhere from $1,300 to about $1,800 basically when you go take a teenager and put them on your policy. So I think where Dan was sharing, keep them on that permit as long as possible, and then you can go from there. So that's kind of overall what you're looking for. Also, if they're good students, look forward to having a good student discount. There'll be forms for you to be able to fill out, but there are ways to kind of help curb that overall initial shock of putting a teenager on your policy. Also, you just want to, of course, be aware that the males are going to be more expensive than the females. So that's a little bit of information there.
1,800, that's per year?
No, well, there are policies in Arizona that are for a year. Most most of your major players are for 6 months.
So the number you gave us was 6 months?
Yes.
Okay, so I had heard, yeah. So that's a couple hundred extra a month, right?
Yes.
So I had heard something like around 500 a month, and I wasn't sure if that was true. And then if you have twins, it's like even more.
Yes.
So,
and a lot of that, Sarina, has to do with how many vehicles are going to be on the policy, because you can't restrict a teenager to only be on one policy. I mean, they put them on one policy, but at any time they can go into and jump into any car. So that is where, if you have the more cars you have, that's where it increases the premium across the board. So it's not just one vehicle that you're looking at. So when I give you that $1,300 to $1,800 range, that again depends on how many vehicles in the family, and also the family driving history, if there is already some tickets or accidents on the policy.
And does it matter if you get them a clunker? Like I have an Acura, but if I get my son like a $1,000 or a couple $1,000 car that already has a bunch of dents in it, does that matter or no?
Yes, it is going to make a difference. In that particular case, if you have more autos than you have drivers, one of the things that we suggest is possibly getting what we call a standalone policy for the father or the mother and that individual teenager, because then the insurance is only covering that one particular vehicle. It doesn't affect the others' insurance policy. And yet, because the teenager has their own policy, they are still can drive any of the other vehicles in the family because they have a standalone policy.
So we have a couple questions. Is there a mileage level at which you see a savings with auto coverage?
A mileage level? Well, that certainly brings up the good, wonderful news that we have MileWise. Yeah. So yes, if you're under 8,000 miles, depending on what you drive, we have a great, fantastic program that can address that.
Yeah, and you might have seen there's been a few competitors, who've come up with it, but it's when people ask how does it work, typically, it's like almost like the rental car model. If you from old, there's a per day cost plus a per mileage cost, and each are based on, again, your driving history, what you're driving, etc. And in fact, it's interesting with telematics today. They base the per mileage number on a normal driver, but if you find yourself to be a better than normal driver, in our case, they'll look at the last 4 weeks of your driving history once you start, and they'll adjust it accordingly. Whether if you're not hard braking, if you're not speeding over 80 on the highway, and you're not driving at like 1 a.m. and 2 a.m. consistently. So in our case, there's things that it'll benefit you as far as not driving a lot and also being a good driver. So it's become a pretty popular program, especially with retirees, but with folks that aren't really driving too much or commuting, or they're working from home. The one thing people ask us all as well is, can you have one car on a program like that and another car on a traditional program? And the answer is yes.
And how long can your kids be on your insurance? When can you get them their own coverage?
Jim, you want that?
I'm sorry, I was looking in your window. I didn't hear the question, because I wanted to just back up for just a second on where we're talking about that you have one individual that drives, let's say, over the 8,000 miles, and you have one that drives under. They will be on the same policy, but one driver will have unlimited miles, and then the other driver will have the MileWise. So they'll all still be on one program instead of separate policies.
And how long can your kids stay on your policy? Like, when can you get their own insurance?
If they're good students, or they're in college, up to 25, you can have them on your policy and still get those discounts. Mm-hmm. After 25, 24, we recommend that they start getting, their own policies, so that they start earning that drive credit and experience.
What if they're in law school?
I'm sorry, I was going to say, in our world, a good student GPA is approximately 2.7, in case anybody's interested.
Oh.
What if they're in law school and they're still a dependent at 25 and they're graduating at 26? Can they still be on your policy?
They can still be on the policy, yes, ma'am, but they will not be able to get the good student discount. It expires at 25.
Would it be cheaper for him to get the insurance in his name at 25, or keep him on our policy?
The way to do that is let your agent know and then let them do a comparison. In most cases, on a male at age 25 is where they begin to get the premium break. But it depends again, because being obviously on your policy, if you have multi-policies, you're getting multi-policy discounts and the type of cars. And so it's specific at that particular time just to ask your agent to do a what if, and then you guys can make a decision which way to go.
Thank you.
So for, if anybody has any other questions on auto insurance, type it in the chat, but I want to ask about homeowners insurance. So what is a homeowners insurance inspection and how often is it done? And then I have another question that kind of goes with that. So if, I guess maybe it would be for home or auto. Like I actually got hit at Target the other day, and but I wasn't in the car, I was in the store. So if I called my auto insurance company and asked them, does that like go on my record? We determined that it only, if our deductible was $1,000, so it would have only cost us like $300, but I didn't want any dings on our insurance, so I just paid for it. It was like $1,300. So can you answer those questions?
Dan, did you get that?
We can't hear you, Dan.
My phone went to mute. I'm not sure why.
There
So,
you go.
yeah, I was gonna say, Jim, you want to finish up with the auto, and we'll move into homeowners in a second. So the call into the insurance company and let them know it happened. It's funny, Sarina, because this happened to me in the same parking lot. I was parked in front of the laundromat there, and there was a shopping cart wedged into the side of my car with a huge. It was an expensive dent. I wound up selling the car. I didn't get it repaired. But Jim, you want to talk to what constitutes a claim versus what doesn't?
Well, again, it's the what if that you can call and certainly talk to the claims representative to find out, first of all, if the claim is going to be covered, and then make a decision about your deductible. And yes, Sarina, unfortunately, a lot of insurance companies, when you do have a claim, they are going to evaluate that as far as, are they going to put a surcharge on the policy because of the claim. It all comes down to history, and again, talking to your agent to get some advice on that. So I think in your case, Sarina, what you made a decision to go ahead and say, okay, we'll pay the 13 because you've got the deductible in there, probably was a good thing to do.
Okay, great.
Yeah.
And then homeowners insurance, Dan, the home inspection.
Yeah, so this is a place that's changing quite a bit, and Jim and I will definitely tag team on this one a little bit, because back in the old days, it was somebody consistently coming out to your home and taking a look at a few things, some potential places that can both that might be hazards and places that could save you some money. So on a new policy, there may or may not be someone who comes out and looks at very simple things. I'll let Jim kind of talk about, because it's good expertise with him. But it just because someone doesn't come out to your home these days doesn't mean it's not being reviewed. And it's funny, we had a few situations like this recently where inspections are being made on the home randomly, either via things like Google Earth or a drone flying over your house. So these days, there may be a drone that may be taking pictures and looking for things like a trampoline that's open, or a diving board in your backyard that wasn't disclosed, or paint issues or trees hanging on top of your home. But so it's a little more, I guess, unconventional. It's a little different than what it used to be. But on an initial inspection, Jim, do you want to touch upon the things they're looking for?
Yeah, they normally are not going to come into the home and require inspection in that. They're looking on the outside. They're looking for any potential liability situations or any deterioration that's been happening on the home. They would just want to see those being repaired. And most of the time now, they are using drones that will the flyover. The thing is that Dan talked about is that things that we see, the thing that we see happening right now is that there are more inspections happening at renewals, and there are clients that are beginning to get a little upset because they've been with a particular insurance company for a long time, and as far as they know, they weren't having inspections, and now they kind of begin to take it a little personal. It's not that at all. It's just because we've had such exorbitant amount of claims that have been happening because of the population boom and everything that's been going on in Arizona. So the insurance companies, their claims are out the roof, and this is what they're doing now. They're doing more inspections. So that's really what's going on. The inspection is just to see and look at the outside, see if there's any areas that need to be repaired or handled at that time. So that's basically what your inspection is all about.
Yeah, not like a typical inspection you get when you're buying a home where they're getting into the attic and writing down 400 pages worth of this has to be changed and that has to be changed. It's a lot less thorough than that. But again, they're looking for places where there's potential liability that can open up the homeowner to a claim, or the insurance company, obviously, that's they're not covered for. So again, I think to what Jim said, there's more of that happening than not, where they're getting these inspections happening where they didn't even really know it was necessarily happening to their home.
And in regards to second homes, or like a rental property or a short-term rental property, what type of, it's obviously like homeowners, but you're renting it out. How does the insurance differ for that?
You're getting in, when you have a rental property, you're getting into what's called a landlord policy. And so it's like a home, but it's landlord. Your liability, as an example, actually comes off of your home liability. One of the things that we definitely recommend is that when if you're purchasing or if you have rental property, be sure that your tenant is required to have at least $100,000 of liability on that property. That helps give you an extra layer of protection for you, and it also helps you to be able to keep the premium down a little more manageable. But it basically, again, it's a policy that's like the home, but it's called landlord policy for anything that you're trying to turn into rental property. Short-term rental type property or seasonal property, it's different than a landlord property, and or if you have a secondary property that you're using for your seasonal, when you go to take a vacation or something. So again, those particular type of things can be discussed with your agent and help you have a good direction to go on which way you want to insure that property.
Okay, great. And I have a question. What is water backup versus flood damage versus water damage?
Well, it's definitely a popular question. Yeah, no, it's this comes up often. We probably have examples of each that again come up quite often. So, water backup, there are three very different coverages. I'll give you an example. So water backup. Give you an example. My sister, she had moved into a brand new house, and it again doesn't matter. Brand new house, home that's much older. She had moved into a brand new house, and she had backup sewage from the local municipality right into her basement. Filled it up. They had to leave the house for a while they fix the damage. And she it's funny. A lot of people don't think to carry this coverage. She was just coverage because it was the original builder that was still had some sort of coverage on it. But otherwise, if it was outside that time, she might have been stuck with a pretty hefty bill and an issue. Flood damage is through the government. That's a separate policy. You may live. And so it's funny, when I first moved out here, the first home I bought was in a floodplain. I'm like, I'm in the desert. I'm in a floodplain. Are you kidding me? Wait a second. I have to pay how much per month because I live in a floodplain? And they required a separate policy that God forbid a flood. Again, the government issued policy. It's covered through them. Water damage, a little bit different from the other two. Pipe bursts in the house causes damage. It's pretty much simple and straightforward to that. I've unfortunately experienced that too, where I had a a water line that was installed incorrectly by a refrigerator company, and it flooded my entire first floor, and all damages were covered. But they don't like having those kinds of claims. I'll tell you that much. It's a nice old disruption, but it's great when you're covered. I'll tell you that. So, Jim, you have anything to add on that?
Yeah, it's just that water damage can be a complicated situation depending on, and the basic way to look at that is it has to be a sudden burst of water that it was unexpected. So if you have a pipe that starts leaking, as an example, that's a wear and tear. The pipe is only going to last for a certain period of time, but all of a sudden, if the pipe is frozen and then bursts, now you have a different type of situation. So all that, the water damage can be, like I said, again, a complicated thing, and a lot of clients can get upset. And the best thing is just go into your policy, look at exactly what that all is and covers, or again, call your agent and have them really explain everything to you so you know what you have there.
Okay, great. Hold on, one other. What about, so what is an umbrella policy?
So an umbrella policy, the very basic, it's liability insurance that's in excess of your other policies. It covers you above and beyond. So, take, for instance, I like to usually give examples, and I've had an umbrella policy for a long time, just in case. I'm glad I haven't had to use it. But, somebody is at your house, they fall and smash their head on a coffee table or something, and your homeowner's policy, your liability limits only cover so much, and if it goes above and beyond and there's a lawyer involved, your umbrella policy kicks in, typically up to $1 million, but there's policies that are above and beyond. Jim, you want to throw some additional color on that?
Yeah, I mean, you can get $2 million or $3 million, and on that. The other thing with the umbrella versus the liability coverage on your home is that a lot of individuals don't realize that if an attorney does become involved, and let's say you have $100,000 liability on your property, and you get sued, and that lawsuit is for $300,000, and they win, and your attorney in defending you now has, let's say the attorney has a $50,000 attorney bill. Well, unfortunately, the policy is only going to cover the $100,000. The $50,000 is going to come out of your pocket, plus the additional $200,000 that's left over for the lawsuit. Whereas with an umbrella, typically it's $1 million, and the attorney fees are outside of that $1 million. So that it's always a plus to be looking when you're trying to determine whether you need an umbrella policy or not, and looking at all the benefits of that. It basically, again, comes down to a personal situation of how much assets that you have. And when we're talking about assets, we don't necessarily mean property. It could be retirement, 401ks, anything that you have that can be attached and taken in a lawsuit situation. So there's why you want to look at that and then make some determinations whether an umbrella will be appropriate for you or not.
Yeah, it could include garnishments as well.
Oh, yeah, that's a good point. What about, I have a question that came in. What do you need to know when you are comparing quotes, and do companies always quote the same way?
No, it's funny, and I wrote a blog on this. If anybody has a chance, as Sarina mentioned earlier on, I like to have fun with the way I write, and I kind of referred to it as a banana split blog. And the way I explained it was, if I came to you and said, hey, what if I gave you the greatest breakfast in the world, that I think is the greatest breakfast with protein and dairy and fruit, you say, yeah, and I serve you up a banana split. You're like, this is not what I asked for. And a lot of times that's what quotes can look like coming to you. A lot of people, unfortunately, will, receive a quote from an insurance company and just scan right to the bottom. What's the bottom line? And just look at the cost, compare, and never look at the meat of it and what's really included in there. And so some things you really want to look up for, or what are your coverages on, uninsured and underinsured, for example, in an auto quote. What are the liability limits? What is property damage? I mean, you think about it, if you're found at fault, going back to what Jim said, you don't have an umbrella policy, very simply said, and actually this example came up yesterday with someone I was talking to. They had, the person years ago had hit a gas line, was in an at-fault accident, and their quote, which was the lowest quote they had, quoted them for, I think it was about $20,000 in property damage. And that gas line alone, that at the at fault, was 30 grand. So it was 20,000 coverage, 10,000 out of their pocket to cover that gas line. And I've seen things as much as $70,000 for a utility pole. So a lot of those quotes will have very differing degrees of property damage coverage, like I just shared right there, anywhere ranging from 10,000 to 100,000. And funny enough, it may not be a whole, much different dollar amount to even raise that amount. Just question what you see there. Underinsured, uninsured, the limits are changing in Arizona as of July to 25,000 per person, 50,000 per occurrence for liability. And so again, you may be getting a quote from one person for that minimum coverage, which again, you get into an accident, whether it's your fault or someone else's, you may not, you may see your assets in the courtroom, unfortunately, or you may not get enough coverage or money back for the injury issues you may sustain or anything else, lost time at work, etc. So it is super important to compare apples to apples when it comes to looking at those quotes as a shopper. See what kind of value you're getting. If in two prices are the same, but one of them will say, hey, there's not going to be any surcharges if you get into an accident, that's your fault. Great. I mean, there's a reason why to go with one. Jim, I mean, other things you want to add on that? There's a lot of ways we can go. Probably could spend a half hour on this alone, probably.
Yeah, I think, and the other part is that there are companies that have teaser quotes, premiums that they get thrown out there. And obviously we all know that the next renewal period or two renewal periods later, your premiums really start climbing. Or there's teaser quotes out there that the company has actually not pulled the motor vehicle report or has not pulled the insurance credit scoring. And we find clients that go with the lowest quote and then once they say, yes, I'm going to do it, they make a payment. And then the next thing they know, a week or 2 weeks later, they get a notice from the insurance company, oh, your premium is actually going to be this because we found out there's a speeding ticket or something on your record on something of that nature. So you just want to make sure, as Dan's saying, that you're comparing apples to apples, or just be careful about going with the cheapest premium, because there's a reason why, and you really want to know exactly, well, why is that? That's would be our advice.
Yeah, and adding on what Jim said, that's really important, because I've seen that now just quite a bit. Making sure they have pulled that motor vehicle report. There are folks that we've seen come and go, and when they've gone, to Jim's point, a couple weeks into their new policy, all of a sudden see an increase because that motor vehicle report was not included as part of that initial quote. So that can impact things quite a bit in terms of pricing.
Okay, great. So one last question, and then I'll just kind of wrap up. Whole life versus term insurance.
It basically, Sarina, is just term is what it really truly means. I mean, you can even kind of look and, well, you're renting your life policy for a period of time, and then at the end, if it's just a 10-year term, that means at the end of 10 years, if you have actually not passed away, so to speak, then it ends, and then you walk away with nothing. Whereas whole life policy is that it's going to go on. As long as you're paying the premium, it's going to go on until there is a claim, or that you are deceased and you're no longer there. And so the whole life is the one also that gets more layers of that, where you have the opportunity to have investment income, and those kind of things. Where again, term life is strictly a dollar amount of premium or coverage versus a time period. So you can go to 10, 15, 20 years. And so again, that's where you just want to talk to your advisor and look at what you're trying to accomplish with that particular type of whole life or term policy.
One of the things that was brought up earlier on the call, there, some folks had some younger, kids, maybe people getting out of law school, for example, and it's really, I don't know if any of them are married or have kids at this point, but there's really no better time than to take a look at it in your younger years than to get rated. That's when I first took a look at it long ago. And it's funny because it seems so far off, 30 years on a policy. Oh my gosh. But it's interesting, throughout time, you see your assets change. It's important to be speaking with somebody, once you pick up a policy, whether you're young or elderly, et cetera, just to really make sure you have that conversation about your assets, what's at stake, what happens if you were no longer there tomorrow is really the question. Insurance is not an easy conversation. It's a lot of hard questions and things nobody wants to think of, but it's actually scarier not to have the conversation. And a lot of younger folks, they kind of forego it by, I'm fine. And then by the time they actually think about it, when they have accumulated assets, they have kids, it's quite a bit more expensive to take on. So again, really great conversation to have in your younger years because of, cheaper premiums that can, last 30 years, et cetera. So it's really, it's probably one of the most overlooked pieces of insurance that's a little more important than people realize.
That's a great point. A great point. So as we wrap up, I just wanted to review. So you at Allstate, you cover auto, life, and home. Is that correct? Insurance?
Yes. Yeah, auto, life, home, business. We have access to quite a bit more than that. You can go as far as event or travel, Mexican travel insurance. I mean, we have access to a full range beyond just home, business, life, ATV, boat, motorcycle, etc. So, and if we don't, we always can point you in the direction of someone that does.
Okay, great. So if we have no other questions, we will make sure everybody on the call gets Dan and Jim's contact information if you have any questions. Do you have anything else to say before we close out?
No, I just want to tell everybody, stay safe, stay healthy. It's obviously, these are fun, and I'd say, hey, let's keep having them even when everybody gets safe and healthy again. But no, Sarina, thank you very much for having us. We really appreciate it. And thank you everybody for joining us and taking the time out with us. Any questions you have, give us a call.
Thank you.
Thank you, everybody. Have a great weekend.
Thank you. You too.
Bye.
Have a great weekend. Bye-bye.
Bye.